All right, guys. In this video, I want to talk about the Bitcoin network hash rate and Bitcoin mining, uh, new productions in the mining sector, and also how it ties into the global energy market. So right now, I'm looking at the Bitcoin hash rate chart. The x-axis here on the left-hand side is sort of marked off, not exactly, but right around the prior halving date, May 2020, all the way up until today's current price action. And you can see. Oh, by the way, this is through Glassnode data. You can get a lot of great data through Glassnode. You can get your hash rate, stock to flow deflection. You can also get great data like Bitcoin flowing into exchanges or Bitcoin flowing out of exchanges. And depending on, they have different level of subscriptions, but depending on your interest or your bankroll, you can get a lot of information through Glassnode. And of course, it's not very relevant if you're trading intraday price action, or even uh, even much larger than that, even swing trading. Really, in order for this information to be relevant, the on-chain data, I mean, you really have to have a time horizon. I would say north of 6 months. If you're planning on buying Bitcoin and holding it for a period of 6 months to a year, then this on-chain data is going to go from not really relevant to all of a sudden extremely relevant and worth the subscription. So anyway, we're looking at the Bitcoin hash rate right now. Let's see. Let me go back to where we were at previously. Let's see. Get this all the way to current price. Okay, so we're back at the current halving cycle, marked off at May 2020, the previous halving. You can see hash rate sort of made a steady march up. And then we have this crash right here. This is the China mining crash when the Chinese government outlawed mining in their country. And I think, somewhere over, I don't know the exact number, but something over 50% of the mining network was, located in China and under Chinese authority. Um, so that's a massive, I mean, this is really a black swan event, at least on a fundamental level on Bitcoin. It's really crazy that this happened. And what's even crazier is, how quickly the network recovered from this type of black swan event. I mean, you literally have a state actor going after the majority of the Bitcoin network. And it's just wild to see how fast that recovery happened. And, a lot of the companies, mining companies had to leave to, countries like Kazakhstan. I think America got the lion's share of the hash rate that migrated out of China. But, when that migration happened, a lot of the mining companies, they need to sell their Bitcoin to, pay their expenses. I mean, moving all that equipment and company logistics and equipment and all of that, it's not a cheap thing. So that it's kind of not surprising that price followed suit in this major hash rate correction. Um, so in a sense, I see hash rate as sort of a fundamental indicator, and I also see it as a leading indicator, in the sense that uh, it's really, if you go back and back test, it's very difficult to find a time where hash rate um, made new all-time highs on hash rate and price didn't follow suit. And typically that new all-time high on hash rate, and in this instance, actually price made a new all-time high prior to that. But this is a little unique in the sense that it's occurring after this black swan event. A lot of times, if you go back and back test this, a lot of times hash rate will make a new all-time high, and then price will sort of follow suit. So in that instance, in that regard, it is very unique in the sense that I see this as a leading indicator, which is very noteworthy because there are very few indicators that are leading. I mean, it's sort of the nature of indicators to be lagging and reflect previous price behavior. But this doesn't it's not based off price behavior. It's it's based off hash power, and it sort of signifies the health of the underlying market. So if you were to flip that on its head, you could say, if say for example, if we saw a very prolonged downtrend, over many months or even say years in the hash rate, that'd be a good signal to say like, okay, maybe something's going wrong with the Bitcoin network. Maybe some of the fundamental premises we based our bullish bias on are no longer relevant or accurate. But we just haven't seen that yet. Price action or hash rate just typically just marches right on up. I mean, year over year, month over month, even after a black swan event like this, it just you know crashes and then steady march up to new all-time highs. So that is really impressive in my mind. And also another thing worth bringing up is there's a I saw a newspaper article recently. I guess the company Intel is getting into the mining business, supposedly with big innovation in the space. I guess they have new mining gear that is supposedly half as expensive as the current mining rigs, and also 15% more energy efficient than the current rigs. Um, so that's going to be a major catalyst when that gear hits the market, and it's probably going to be marked by a lot of fundraising and purchases around that time, whenever that gear goes live, and also recapitalization of existing mining companies. Also, the capitulation of mining companies that are barely profitable, and that's the type of competition that just pushes them out of the market. And that's another thing worth mentioning of how the foundational structure of the mining network does affect prices. A lot of times, around the halving, this is a great example of it. Around the halving, when the block reward drops, gets cut in half, as most people know, a lot of times that will cause a capitulation among miners that are right around the edge of profitability. And that can, if that capitulation happens, then a lot of times that large mining company, maybe they're an industrial scale miner, they have to liquidate their entire treasury to satisfy their debts and their creditors. And that can happen very quickly and with a lot of conviction, and that's the type of price action in the market that it's just not really possible to time it. So if you have a risk model or a trading model, um, you need to always factor in that inherent uncertainty and the acceptance of the fact that there are events like that occur, that there's just no way to predict them, and there's no way to identify them with technical analysis. And that's not to take away from technical analysis at all. It's just an inherent reality on the uncertainty of the market. um, I also wanted to talk about this Bitcoin article. It's a NASDAQ article. Bitcoin has already won. Soon the price will reflect that. Kind of covers some of the things you probably already know about the Bitcoin network. But what's interesting is this paragraph here. I think this is a part of an aspect of Bitcoin that maybe people aren't entirely familiar with. Um, the idea that Bitcoin unlocks trapped energy. I think there's a narrative going around that Bitcoin is it's energy inefficient, it's wasteful, you use more energy than whole countries. You probably know where I'm going with that, but the reality is that Bitcoin has created an incentive structure around energy efficiency and optimizing energy efficiency that didn't exist before. I mean, previously you had a lot of money being issued by governments to projects that may have had an initial concept that was good, but they weren't able to create a working product or to actually manifest that funding into a actual energy innovation. But Bitcoin is, it's sort of the very entrepreneurial and uh, rugged market test of any energy efficiency idea, right? it creates a very real incentive and very visceral incentive for someone who has that edge in energy optimization to enter the market and outcompete everybody else. And that's something I think that we will probably see happen, I think particularly in the nuclear energy sector. Um, and I'll make a separate video on that coming up soon. But, you know, Bitcoin kind of popped up in these regions with respect to trapped energy. You see, it was very popular in Siberia, Russia, um, China. You had these regions in China where there's a lot of dams in southern China, and the Bitcoin miners sort of surrounded themselves around those dams. And because you have the issue of trapped energy there, right? You have all this energy that would otherwise dissipate into the environment because you really don't have a lot of people living around a dam, right? And it's very difficult to transfer that excess energy um, across large distances. So you also have the same situation in like Russian Siberia. Um, you have a similar situation in El Salvador, and they're using the Bitcoin network to uh, mine Bitcoin using geothermal energy from volcanoes, and that's another situation where not a lot of people live around a volcano, um, so they also have the same issue of trapped energy, right? But you have a ton of energy. Uh, Ultimately, it's very difficult to transport across long distances. And you also have the fact that the Bitcoin network also balances the supply demand ratio for a lot of energy markets. So you have a dynamic where a lot of major energy conglomerates like GE and these well established corporations are naturally becoming Bitcoin miners because it balances their supply demand needs, in the sense that they can plug a fraction of their network into the Bitcoin mining, and if they have this steady supply of energy coming, and maybe the population's demand dips down for whatever reason, they can divert some of that excess supply towards securing the Bitcoin network and mining the Bitcoin network. But if the population's demand suddenly increases for whatever reason, maybe an anomaly in weather or climate, and there's a sudden need for heating, they can redirect that energy from the Bitcoin network to satisfy that population demand. And they have an incentive to do that because that natural demand will generally have a premium above the security of the Bitcoin network. And that's just sort of how the network operates. And there's an incentive to keep that uh, Bitcoin fee structure below the natural supply, demand of the market. So I hope this video is interesting. Hopefully it'll be part one of a series, but more to come.